All right. Hey, what's up, everybody? Welcome to March 10th edition of the MakerDAO community call. And my name is David Ethichub. I work doing community development for the Maker Foundation. Have been a longtime community member of MakerDAO, and I get the joy of facilitating these calls. So usually, if you haven't been into any of these calls or heard any of these calls before, we kind of have lately we've been having a guest kind of the first half of the call. We usually do like a demo, some Q&A, and we try to like poke our heads into some interesting part of the DeFi world or the blockchain world that's relevant, and it's always a joy. Today we're gonna have a couple people from Ethichub, Gaby, and Jori. I messed up the time, so we're actually gonna do that the second half of the call. But for the first half of the call, we're going to do kind of what we usually do, our usual agenda. I'll actually post the agenda document in the chat if you guys want to follow along. I have all of the links to the stuff I'm going to talk about there. And yeah, so we're going to go through kind of just governance, I guess, first. And then if our guests join in time, we'll take a pause there. We'll do like an interesting demo and a Q&A session, and then we'll come back and we'll talk about some other highlights in the community, notable threads, videos, events that are happening, and maybe if we even have time, we could talk about CAT, which is a smart contract. Well, it's a smart contract module in the Maker protocol that is responsible for doing system liquidations, or actually like finding the vault or position that's ready to be liquidated and taking it into the auction house, which is also just another set of smart contracts. So yeah, so let me actually share my screen here, and I can go through kind of a quick snapshot of not my entire screen, a quick snapshot of governance this week. We could start off there. All right, cool. So yeah, so just a TLDR, a governance poll that was released last Monday for reducing how often we do a poll for the DSR spread passed. So now we're only going to be polling bi-weekly instead of weekly. So, and as you can see, this week there actually is no governance poll for the DSR spread as a result. And I guess I'll cover the governance polls first since I already started there, but the usual two for the stability fees are up. The size stability fee is up. There's a range between 5.5% to 13.5%. I think it's sitting at 10% right now, if I'm not mistaken. Actually, let's check that real quick. 9.5%, and I think the winning option for this poll is sitting at 10%. And then the close second is 10.5%. The governance poll for the DAI stability fee adjustment is between 4 and 12%. This one also, I checked last night. I believe it was sitting at 1% lower than it is now. So the current stability fee is 8%. No, not Facebook. My stats. Yeah. Okay. So the current stability fee is 8%. And I believe, yeah, the winning option is 7.5%. So, oh no, sorry, the winning option is 6%. Oh wow! So, there's currently a battle amongst a couple of whales to get the stability fee down, and I believe that this is actually a result of the recent trend in the DAI peg, since it's been trading above the dollar price, and that's mainly been a function of the ETH price movement. There's been a lot of DAI demand on the open markets lately, but this is actually really interesting to see. I did not see this last night. So there we go. We have some interesting stuff going on with the stability fees. It seems like it's been at 8% for quite a while now. The other two governance polls, which are not regular governance polls, are up. So one of them is to activate the governance security module for single collateral DAI. If you're interested about why this is important and kind of the reasoning behind it, I highly recommend you check out either the summary of last Thursday's risk and governance call. And actually, if you click here, there's a link to the video, and you could check out Mariano's short presentation discussion on why it's important. But the gist of it is that we passed a security a governance delay through the governance security module for MCD. So now anytime something passes through an executive vote, there's a 24-hour delay. So if, like, the 6% goes through the governance poll, and on Friday it goes to an executive, that executive passes, then it's only going to get the rate is only going to be changed 24 hours after the executive vote passes. But the problem is that there's no governance delay for single collateral DAI, and the reason this is an issue is that if somebody does a governance attack on single collateral DAI, multi-collateral DAI is still at risk because of the beauty of the migration contract here. And the migration contract, if you don't know, it allows you to swap Psi for DAI one for one. It's basically a vault that uses Psi as collateral, and has 100% kind of collateralization rate. It's a specialized tool specifically for the upgrade to multi-collateral DAI, and as you can see, there's a nice healthy amount of Psi sitting in the migration contract. But because there's no governance delay for single collateral DAI, there's still kind of a hole in the security of governance that was originally the whole point of the governance security module's delay from MCD. So now we're voting yes or no to do the same delay for SCD, and I believe the winning option is currently yes. But of course, this poll is going to end on Thursday the 12th at 5 p.m. UTC. So if you're an MKR holder, go voice your vote with your tokens. And then the last governance poll is the migration contract to debt ceiling adjustment. Also related, it's kind of a risk measure. So right now, I don't actually know what the debt ceiling is for the migration contract, but I know it's definitely not low. But we are voting to have it put to 10 million, if I'm not mistaken. And what this is going to do is this is going to basically cap this number at 10 million. And so you could see that there's 21.4 million Psi still in existence that were created from the single collateral DAI system. And yeah, it's just a risk measure, so it kind of caps our exposure to Psi and single collateral DAI. And yeah, this is just kind of like a no-brainer, but nevertheless, if you want to hear the discussion about it, definitely check out the poll. And there's links to the video, audio, and a discussion thread about it. So check it out. Yeah. And so for the executive vote this week, there was only one parameter that was voted through the governance poll last week to change, and that was actually the DSR spread. So the winning option was for 1%, whereas it was sitting and is currently sitting at 0%, meaning the current stability fee being 8% between ETH and BAT. We're seeing, because it's a 0% spread, that the DAI savings rate is also 8%. So if this executive vote passes, then the spread is going to be set to 1%. And as a result, the DSR is going to move down to 7%. And likewise, actually, kind of give you a bit of a scenario. If the DAI stability fee poll passes on Thursday with a 6% decrease, and that goes to an executive on Friday and passes, then actually, if the DSR spread passes before that, then we're going to see a 5% DAI savings rate potentially in about, it could happen as early as, it actually happen as early as Monday or like over the weekend. Yeah, if the spread actually passes, because right now, if I'm not mistaken, yeah, there still is a need for another 12K MKR to pass, and this has kind of been a contentious topic. A lot of people argue for a 0% spread from a business perspective to increase DAI adoption in a world that's starving for yield. DAI having a 0 spread and offering a competitive and good rate on the DSR is important, is seen as important by MKR holders. for the adoption of DAI and the growth of the system. But nevertheless, a 1% spread or 0% spread, business decision. If you're an MKR holder, go voice your vote. All right, cool. So that's it for the votes. There's let me actually take a pause here and see if our guests joined yet. No, they didn't, but it's okay. All right, cool. So governance at a glance. If you don't know about this already, we have a lovely community member, Long for Wisdom, who updates this every week. If you're interested in what's going on in governance, some of the conversations in the forums, there's also kind of you don't need MKR to vote in them, but there's signal request threads that also kind of steer the direction of our community's governance over the Maker protocol. These largely influence the governance polls that go up. So they're kind of a tool that we use as a community to measure sentiment around certain things. And the most recent two were obviously to, well, not obviously, but most recent two were to reduce the frequency of the DSR spread, which actually did happen, and then to add ranked choice voting, which there is a overwhelming amount of people in favor of this, and I believe it's actually going to be going to an on-chain governance poll pretty soon. And this is nice to see because it's actually a result of community-driven proposals on how to improve governance, and so it's been really great to see a couple of cool things getting passed in the past, and more improvements to be passed in the future. A few really cool things came out this week. We have an updated collateral onboarding process. So this was put out by a combination of our internal risk team and a bunch of independent contractors who also work on risk. And so, yeah, it's put up for review, and they're asking people to read through it and give some feedback if you're an MKR holder. It's super comprehensive. I personally am actually set aside some time to read it later today. But if you're interested in the collateral onboarding process, highly suggest you read this. There was also, a proposal. This is the forum post to add a governance delay to single collateral DAI. So we saw that there is actually a governance poll happening right now for that. This is a proposal that kind of talks a bit about why this vote is important. And it was posted by Mr. Mariano Conti. There's also a signal request thread, precedents for on-chain polling. So this is an interesting topic that was that kind of came to a head during the Thursday governance and risk call. So the idea is that, okay, so for a community member to get something into a governance poll, which currently the Maker Foundation has a team that actually goes through the process of creating the polls and hosting them on the Maker Foundation's voting dashboard. To do that, usually, there's like a process where people go for a signal request thread, and if there's enough sentiment in the community, it's put up to an actual governance poll. But with the case of the single collateral DAI GSM delay, there was no signal thread, and it was kind of just a suggestion, not really a suggestion, but it was a proposal, primarily that came from the foundation. That was kind of like it was obvious proposal, right? The sentiment seemed pretty solid on it, but it kind of begged the question of the process. Like, should I don't want to say foundation employees, but should domain experts like Oracle teams or risk teams, should they need to go through the process of a forum signal request? And so this is kind of a conversation and a discussion that's being had here, and a bunch of people are voting about it. And so, yeah, if you're interested in kind of dissecting the conversation, check out this thread. Yeah, and I believe that for the governance security module delay for single collateral DAI, it was kind of yeah, it seemed like an extra step that was needed, but I'm not 100% sure. So, actually, should read on why it went out this week as opposed to next week, and yeah. But either way, this is the conversation that is relevant to that. All right, let me take a pause here. That's pretty much it for governance. If I missed anything, definitely feel free to speak up. Yeah. All right. So moving forward, some partnerships. Well, actually, just one that I saw. Storm Shop integrated DAI amongst other cryptos to reward shoppers with some cash back. That's pretty cool. And then from the foundation, so our team at the foundation has been putting out articles on our blog for newbie crypto people who are trying to understand better why they should use crypto. And we put out a couple articles this week. So one was why DAI is the most used cryptocurrency in the DeFi space. And then the second one is the cheapest way to transfer money internationally. And it's a piece about remittances. Yeah, that's about it for the blog post from the foundation. Highlights from the community. So this was really fun to see in the chat. But so Marto, who is the author of daiauctions.com, and if you don't know about daiauctions.com, highly suggest you check it out because it covers all of the system auctions. So these are all of the ETH vaults that are getting liquidated. These are the BAT vaults getting liquidated, and then these are the surplus auctions where the MKR is burned as a result of these. But definitely check this out. But we got a surprise pull request. Yeah, life always brings you surprises. Wasn't in any roadmap, but some days ago, my little open source side project got a little code contribution called Chinese version. I was amazed for the effort. Wasn't, quote, truly working, but I get inspired and determined to make it work. My little code base wasn't prepared at all to add a new language. It took a lot of work, many back and forths with my new Chinese friend. But now I'm proud to say daiauctions.com supports Chinese, and it's also developer beautiful. So that was pretty cool. We had a community contribution to a community project, so that's always like really fun to see in the open source world. A couple of developer creations, Maker Holder Digest, which is posted on Reddit. It's posted on Medium under Adrian Hacker's handle. It's now also on mkrdai.info. So if you are interested in kind of a weekly wrap up of what's going on in Maker, yeah, you could check out the Maker Holder Digest. And he has a whole bunch of other stuff on here too. Yeah, so yeah, check it out. Oh no. Yeah, so yeah, it's hosted on its own website now, but it is still going to be posted on Reddit. And obviously, Adrian is actually super keen on getting feedback to make it better. So yeah, if you are a regular reader of his digest, give him some feedback, make it better. All right, cool. We also saw that DeFi Saver came out with a functionality for one transaction CDP closing that utilizes Aave flash loans. And if you want to read a little bit about it, there's a really great Twitter thread, and I believe there's also a Medium article attached to it that explains the process. But in general, I think actually over here, yeah. So here are the steps. So the DAI flash loan is taken equal to the CDP debt. It pays back the debt. And all this is done in one transaction, by the way. It withdraws the ETH from the CDP. It sells the ETH for DAI via a decentralized exchange to pay off the flash loan debt, and then yeah, it pays back. Wait, what? Yeah, pay back DAI flash loan debt. Yeah, withdraw remaining ETH. Okay, so it withdraws a portion of the ETH from the CDP, ETH to DAI, via DEX for the flash loan debt. Yeah. Okay, I think I'm wrapping my head around that correctly. But either way, it's just a single click to close your CDP, and it's pretty cool. Pretty cool that flash loans are not just useful for exotic arbitrage exploit opportunities, but they are practically useful for other things like that. So that's nice to see. Feel free, by the way, to add any comments, questions, or anything in the chat. I'm just going to keep going through this, and hopefully we get our guests on here shortly. So yeah, notable threads. This was a really interesting thread about a community member trying to estimate a loss given default calculation. And this is interesting because for traditional kind of loan products, whenever you're doing like a risk analysis or of the product, you try to figure out the loss given default, given like the borrower profile, and like there's a ton of variables that go into the calculation. And this thread is really interesting, especially want to call out on Cyrus's really great explanation, putting things into context for how to calculate the loss given default in Maker. So yeah, check it out if you're interested in that. Data on recent liquidations between Maker, DYDX, and Compound. So I actually saw this thread this morning. I thought it was super interesting because Maker actually occupied like 1% of the liquidated collateral. And I thought this was really interesting. And I think it's actually a result of not just having our system having like a higher minimum collateralization ratio requirement, but also because we have a higher liquidation penalty, which is at 13%. I think it's higher than both DYDX and Compound. And then also because there's tools like DeFi Saver and Instadap that kind of can automatically prevent your position from closing by just, either unwinding your position or doing the flash loan thing, or, there's a ton of really cool tools for Maker Vaults, which I don't know if many of those same tools exist for DYDX or Compound, but nevertheless, it's really interesting. We're about 1% of the liquidated collateral. Yeah, so, and read through the whole thread is really good. There's actually a bunch of data he puts out. And actually, one thing that was really interesting, and I don't know if his theory is right on it, but he observed liquidators performing non-profitable liquidations in an attempt to dry out the competition. So this is the interpretation part, in an attempt to dry out the competition. But he's seen people, overpay in gas to get smaller reward, but I guess to disincentivize other liquidators from participating. Yeah. I don't really know if I buy that, but curious to hear your thoughts if you guys have any.
Yeah, I second that observation. I've seen a few different actors on mainnet actually bidding a fair amount above FMV for collateral.
And you think that's actually to like dry out the competition, to get people from losing faith in winning the gas battles?
I won't opine on their motives.
Yeah.
It could be as simple as they're doing liquidations on a bunch of different platforms and they are just not monitoring it closely enough, or they might not be using a good feed to determine FMV.
Right. Yeah, that's super fascinating. Yeah, thank you. Some good comments there, Ed. All right, cool. So another notable thread, where's NMR? So erasure, I don't know if I'm pronouncing it right, but Numari, who just recently announced that they're going to be using DAI for payments and staking. And then in the background, I think they're going to be buying NMR and burning it. But they're kind of succumbing to the whole why do I need a token question. And this is a really interesting article to read. The tone is just really fascinating, but it's interesting to see projects with tokens kind of pivot as the space progresses, I guess. Yeah, that's how I would say it. Yeah, but really interesting article. Check it out. And then one more thread that I highlighted from Reddit, understanding liquidation of ETH Vault 1845. And so like so there's a lot of differences between how liquidations occurred in single collateral DAI versus multi-collateral DAI. And I think when people saw there was a tweet bot, yeah, the MakerDAO Twitter bot. Oh no, didn't mean to close that. MakerDAO Twitter bot kind of tweets when stuff happens, and somebody saw this, MC, owner of Vault 1845, is getting liquidated. A first auction for 50 ETH has been kicked off, and it was canceled, like around $7,000 worth of debt, and then they had like $165,000 left. And so people kind of saw this and were like, okay, so wait, the whole position doesn't get liquidated? And then, yeah, so highly suggest reading through Mark's explanation of how the liquidation occurred for 1845. It's actually really fascinating, and his write-up hits it exactly the nail on the head. But generally speaking, auctions happen in 50 ETH batches, and then as yeah, actually, I'm not gonna butcher the explanation because I should probably reread this one more time. I read it like pretty much when he commented, but yeah. So read through that if you're interested in it to see how the liquidations actually work. But yeah, they work in 50 ETH batches, and it's a little bit different than single collateral DAI, but nevertheless, super interesting stuff. A couple of videos. Adrian Hacker, who produces the digest, did a short demo on how to lock DAI into oasis.app/save, which actually uses the DSR. It's like a front end that accesses the DSR, and so yeah, you could check that out if you're interested. Yeah, and then we also saw Ethereal Podcast Episode 1 featuring Mariano Conti. This was a really great episode that I didn't listen to about why MakerDAO is head of smart contracts dog foods die. And I know it's good because just Mariano, listening to him talk is always eye-opening and interesting. So I highly suggest check it out. I might check it out with my lunch. Who knows? But yeah, that's pretty much it. It was not too crazy of a week. But yeah, let me take a pause here, stop presenting my screen, and check to see where the guests are at. All right. All right. Worst case, we could reschedule with Ethichub. Oh no, yeah, right on time. Hey Jori, how's it going? Hey guys. You're muted. Just a heads up. Hey, what's up? Yeah, so sorry about that. I posted the time incorrectly because of daylight savings, but the great thing, the fortunate thing is that we actually just went through the usual agenda. So what I was going to cover in the second half of the call, and you guys joined right on time for the whole Ethichub special guest side of the call. So for those of you on the call, and hi, I'm David. I don't think we met before, but hi. And so, yeah, sorry, brain is waffling a bit. So yeah, this is Jori and Gaby from Ethichub. And a little bit about Ethichub. Ethichub is a crowd lending, peer-to-peer platform for investors and farmers. And I believe you guys work primarily with coffee producers, right?
We are starting with coffee producers in Chiapas, Mexico, because this is something we really know. My family have a coffee farm. Gaby's family was into the trading of coffee in the area. So if you are starting a project like ours, that we have to trust the borrowers. No? We are lending money to farmers. You have to know them well, no?
Right.
Why we choose these farmers, not that farmers, why we select them this way and not the other way.
It's very important, the deeply understanding of the problem. So
Right.
we understand the problem within coffee, and once we validate the hypothesis we have on this, we can extrapolate it to other harvests, to other crops, because this is a huge problem. The unbanked farmers is a lot.
Yeah, financing for farmers is a really big market, and it's interesting what you guys do, because you guys help the unbanked get financing, and you do it in a non-collateralized way, and you allow crowd lending to help with the liquidity of the financing. So, when did Ethichub start? And like, tell me a bit. Did I get something wrong? I think I might have gotten something wrong.
Yeah, it's uncollateralized, and it's collateralized with the coffee.
Oh, okay.
So it's very important.
Okay.
We try to address risk first by properly selecting the groups. It's a collaborative, it's a group loan, solidarity group loan. So default rate in microfinance is less than 3% worldwide. So it's a low risk farmers we're working with. Coffee is a non-perishable. And we use the harvest as collateral for the loans they're asking for. So the risk is further reduced.
Yeah. I mean, but in decentralized finance, people are used to have a token collateral. No? It's a fully automatic collateral.
but that's interesting. That's interesting. So tell me a little bit more about maybe like walk me through an example. Like I'm a harvester of coffee beans, and I want to get some loan through you guys. What happens?
So basically, first thing you have is
I know. I think you guys are breaking up a little bit.
Yeah, it's awful. The internet connection here in Tapachula.
If you guys would like, if you want, you could try to turn off the video and just keep the audio, and I think that might increase the quality of the audio itself.
Okay, let's hope that it takes a bit less whiter than. Yeah, that's terrible. Imagine if we have these problems, the people up there is not able even to have a phone call because of the lack of Wi-Fi or signal over there. Yes, so Jori, you were telling an example. So first, they have to gather a group, because that's the first filter of trust. As Jori said, we don't know them, but they are finding 19 people willing to form part of this group. So that's the synergies of the community. They know each other, they are neighbors.
This group is what, lenders, or this is a group that's kind of like group borrowing through this loan agreement?
Yes, the borrowers. These are the farmers. So they are all coffee producers, they're neighbors, and they know the lands are productive. So they are able to pay back. And on
got it.
Regular crowd lending, people doesn't have to know each other. Actually, all our marketing is focused to the lender side, because the farmers, the borrower side, doesn't have access to internet. So that's most offline for them. And for us, changing DAI for Ether was a huge cost into the lender side, because the problem was, I will give you an example. When the lending time is open, say they request $8,000. So lenders start apporting their amounts. While the collecting period is open, volatility of the Ether affected us greatly, because maybe the people who put the money first day won't have the same exchange than the people in the last one.
Right.
So DAI for us meant a huge change on that, while it's having other complications, like it's not as easy to exchange as Ether is, but on the technical side, it will give us, it's giving us a lot of better performance regarding the investors.
Yeah, it's fascinating. So, right. So the loans were not made in ETH because it's a volatile thing to. Yeah, you don't want to do that. So yeah, DAI is important for your ecosystem. So tell me, is there the platform itself that the loan is created to, or does it happen through like an actual process of like legal documents and all that kind of stuff?
Yeah, we make some legal documents in paper here with the farmers. So basically, first document is they nominate the represent one guy who is representing them, is one of the farmers, and then with this representative is we work, we make a contract, and this contract is basically delegating the relationship, the contractual relationship, to the smart contracts. So, yeah, at the end, if there is bad faith and they don't pay because they don't deliver coffee, because they sell the coffee somewhere else and they don't pay for the loan, we could ask for how do you say in English? A judge to enforce the debt, right? But this is not the idea. The idea is that basically normally if they don't pay, the only way is normally because there are earthquake or something. No, there is a huge environmental issue.
Right.
And that way, basically, we have an ethical recovery debt policy, meaning basically we won't ask them to pay back. We are producing a decentralized insurance, which is a compensation pool, is a smart contract. Every lender put a small part of the loan into this smart contract, and if someday there is a default, this smart contract pays back to the lenders for the capital invested. But this for sure will take time to be fully safe. No?
Right. Yeah, that's interesting that the lenders are actually also the insurers. Huh. I'm trying to wrap my head around that a little bit. Okay, cool. So
and another part that we didn't explain it well enough is that we also help them to sell their crops. So
Ethichub is kind of like everything. It's the loan provider. It's the insurance on the loans. It's also kind of like a community where you connect also the business connections for the farmers, right? It seems like a whole ecosystem.
We call it a market where we get in contact the small producers with global lenders and direct buyers. The idea, the crowd lending is solved with the low risk and that, but the trading part reinforces the lending process by providing a collateral for the payment of the loans. So that way we create what's called non-extractive finance. We create more value than the one we are retrieving, and even though it's profitable for all the parties, lenders, direct buyers, and Ethichub. And of course, the farmers, which are the main beneficiaries of the platform.
So if a harvest fails, then that means that the collateral that was promised is unproduced and doesn't exist, right? And then the insurance has to kind of cover that loss, right?
Yes, well, at the beginning, that's why they get a 15%, because obviously there is a risk. But later, we're foreseen to have an economy of scales. So in the future, this 10% of the compensation pool, once this is global, it can cover for natural disasters. Right now, it's not possible because there's not enough funding within the pool.
The compensation pool is not working still. We are working into delivering the compensation pool.
So tell me a bit more about, like, from a technology standpoint, where Ethichub is at. What can the platform do? And maybe like some metrics about how many loans you guys have done to date, and kind of the track record of repayment and stuff like that.
Yeah, so basically we launched the platform on June 18th. after like 9 months of working
in 2017
idea and then into the product.
or
18.
Okay.
Yeah. So 1.5 years ago, almost 2 years ago,
Nice.
the platform itself.
Nice.
Yeah. So, and first harvest, we worked with 60 farmers. We intermediated only $40,000 in loans, and this was more kind of pilot project, and we had 0% default. And in this harvest, we have increased. We are now almost with 200 farmers. We have intermediated almost 200 more than 200K in loans. Still 0% default rate, and now we are into the pilot project of commercialization of the harvest. We already have over 40 tons in our warehouse, and we are sending this to China and Europe to sell the product.
So what's the typical term of a loan? Is it customizable? Do you guys have like standardized kind of loans that you like to take that make sense with these farmers?
Okay. The maturity varies depending on the how many months before the harvest you provide the funding.
Got it.
Because as coffee
there's usually
in Mexico,
one harvest a year or two.
Yes. Coffee, it's only one harvest a year. So recommend these loans in tranches. So say after harvest finish, the first loan they need is to clean in the trees and to pruning and all that kind of different works for the land. So maybe they do 5 or 6 loans along the year, and all of them are going to be paid on the harvest after they sell the crop. So depending if you lend the money, say 8 months before or 3 months before the harvest. That's it.
That makes sense.
It's very complicated to provide loans because microfinance, they want the payments pay back every week or every 15 days. And that's not possible for a farmer. That's why our solution, it's also addressing this problem. And that's why the IDB lab.
And that's why what? Can you repeat that? I'm sorry, I think you might be cutting out again. Oh no.
Inter-American Development Bank. It's a multilateral organization. Can you hear me?
Yeah, the last thing I heard was about the bank, that it's a multilateral organization, but I missed probably the 2 or 3 sentences before that.
Okay, it's a innovation branch from the Inter-American Development Bank.
Okay.
And they gave us funding for the project because they said nobody has been able to reach this last mile farmers with less than 30% here, and we did. So that's why they are so happy with the project, and they see this very promising. Nobody is serving this profile of farmers, and we are doing. So even when it's tiny numbers for such a huge organization, they see the potential of Ethichub because we already are there with these rates.
So what kind of rates are they actually paying? I think you mentioned when you first came on, but can you remind me?
Yeah. So basically, they pay first year 3% monthly.
3% monthly.
And this, and this is decreasing year after year because like an incentive for them to be trustfully. Every year will be cheaper, the loan, and you will be able to ask for more loans, and you will be able to sell in better conditions as far as you continue paying. right?
So I know that I read in one of the blog posts that you guys put out that you guys were using something called local nodes for the reputation management of the borrowers. Are you guys still doing that, or how do you approach like the reputation management side?
Yeah, we have like two strategies. Our original strategy and the one we like most is using local nodes, who is somebody. Normally in a microfinance institution is the guy who is working in the microfinance institution visiting the communities. So we take this guy and we eliminate the rest of the microfinance institution, automatize and
I think you're cutting out again. Oh no. Okay, you're back. I hear you.
Yes.
Okay, so the last thing I heard was, yeah, I can hear you now. So the last thing I heard was that you guys use local nodes to cut out the rest. Yeah, can you just repeat the whole part about local nodes? So to clarify, local nodes is an organization, or it's like somebody on the ground that's just a local person that is familiar with the borrowers?
We have both. We have, for now, we have only one guy, and he's a person. But in the future, we envision that we will be working also with companies doing acting as local nodes.
Okay, understood.
Who promotes the loan to form this.
You guys cut out again. Okay. Oh, I hear you guys. So sorry that the internet is so bad.
Yeah, can you hear me?
Yeah, I can hear you now.
Yes, I'm so
No,
sorry.
it's okay.
Okay, so
All right.
yeah, that's the problems the farmers also face here for everything. But still, against the odds, we are going forward, and we are very happy with the results. And Jori went to see if they can restart or something the server, but this has been happening the whole week. So
Yeah.
can you hear us better?
Yeah, I can hear you. Yeah.
Okay.
Nice. So, tell me a bit about like the platform itself. If you guys want, you can even share your screen and show us, or just talk about it and let me know kind of where the platform is at, what kind of functions it facilitates in the whole process. Did you guys hear that question? Just want to make sure. Check.
And now you hear
you guys
better?
Yeah, now I can hear you now. Yeah.
We are going to a mobile phone. We hope now we can have a more regular internet.
So you were asking the functionalities that are now in the platform, okay? So if you get in, you will find that before it was only one project at a time, so they wouldn't compete for funding. Now that we have every month the number of lenders is growing, we have 2 of them, even 3 at a time. Once one is completed at 80%, we upload a second one. So that way the projects are going faster and faster. The functionalities for the user, well, the most important for us was introducing the payment gateway for using fiat, for using euros, because we don't have crypto users as typical lender. Even when there are some, most of them are not. So for them, it was too complicated to get the wallet and buy the crypto. Now the wallet is it's within the platform, even when it's an Ethereum wallet and we don't have the control of the keys. They are within the platform for make it easier for the users. So they can choose between contributing with fiat that will be internally transformed into DAI, or they can charge their wallet from other sources with DAI, with crypto, and then use it.
Quick question. So for the borrower, who's the farmer, right? They're receiving the funds, I imagine, not in DAI, but in something that they can spend locally, correct?
Yeah, now they are receiving DAI.
They're receiving DAI.
Yeah.
How do they spend it on overhead and operations?
No, that's the since we switched to DAI, we eliminated the problem with Ether volatility, but now we have another problem, that is that in Mexico there is no gateways for DAI to Mexican pesos.
Yeah.
So there is a huge problem we are having because of early stage of DAI implementation into the real world. No?
Right. So do you guys facilitate that that conversion of the DAI into the peso?
Yeah.
So that the farmer
for some weeks we are doing that until the Mexican exchange Bitso will integrate DAI.
Oh, that's interesting. Okay. So the lenders can choose to lend directly in DAI or in euros. Your platform gives the functionality so that if it's euros, it converts it into DAI and lends the DAI at the last step. But then also it gives the farmer, the borrower, the access to the actual peso, right? And let me know which part of that, if I'm getting anything wrong. I'm just trying to wrap my head around the whole process.
Sorry, I didn't follow you.
So the borrower, right, the farmer, they have to spend what they're borrowing, and they spend in Mexican pesos, right?
Mm-hmm. Yes.
Yeah. So the platform, a part of the platform, facilitates the exchange of the funds that are being lent, whether they're euros or DAI, ultimately into Mexican pesos, and that's like one of the problems you guys are solving for the community and for the whole financing problem, right?
Yeah. Maybe Raul, are you there? Maybe he can explain this better. This side. I mean, we are in early stages.
I'm here.
Yeah.
Hello. Yeah.
Hey, Raul.
The farmers have to be able to spend the money actually. So we do. They don't know much about blockchain, so they just receive pesos, and we cover the exchanging part for them. We are integrating. We are evaluating several platforms like, for example, Wire or Bitso. It's a Mexican exchange that was in. They're going to integrate the DAI soon. So the idea is to automate the process more for them. Right now, we've been working with OTCs, but we will. I mean, the vision is for them to have either like a DAI debit card, or there will be like a point of sales from DAI or something. But until they can use it, we have to change it to fiat.
Right.
Maybe
of course,
crypto pesos or something in the future. I don't know.
So this segment of farmers, when they spend, do they spend primarily through electronic payments or through cash?
No, at this point, cash.
Cash,
yeah.
Right?
Nowadays, they live in cash, and Mexico is one of the countries with the highest cash economy in the world, with over 90% of the operations.
Right. So then a part of the process is also actually delivering the cash to the borrowers, right? From the perspective of Ethichub, right?
No, what happens here is we, as I told you at the beginning, they nominate a representative of the community, of the group, no? Loan.
Yeah.
So
Yeah. Right.
This guy, he opens a bank account and he receives the Mexican pesos from the OTC or from Bitso or from Wire. And then he cash out and deliver the cash to the community. Right?
Got it. Got it. Okay, understood. Yeah, so I was just trying to wrap my head around like the practical logistics of it. Okay, cool. That makes sense. Thank you. All right. So what's the vision for the platform moving forward besides the integration of the exchange from fiat to crypto to fiat, and also kind of what's the future of the platform itself?
If I may.
Yeah.
Yeah. Well, first, I would also like to say that the platform is now gasless for the users. Thank you for deploying DAI with this permit function that allows us to do that.
Nice.
And we are also using OpenSeppel's GSN, gas station network, to power this. The immediate future is, well, we have to make it easier for the users. UX is a big, still a bridge we have to cross in crypto for them to understand the returns, to even recover, integrate it with projects like Agent, for example, we'll see. But basically, fiat on and off ramps are a must. We have to build also this compensation pool we described before. It's more like it's in the drawing stage at this point, but we will want to launch it this year. And the vision for the far future, I guess, is to have for the farmers to have an app with a debit card, let's say, something like it, something they can recover, and they can do also everything in crypto.
Nice. Well, it's we're coming at the top of the hour. Do you guys actually have maybe one of you guys can screen share the platform? I'd love to see like what it looks like in the last like maybe 5-6 minutes we have.
Yeah. Do you do that, Raul, or do you want me to do it?
Logging in. Sorry, 1 second.
Well,
I mean, how do we?
So I would say that the vision is this compensation pool is key into mitigating the exchange risk, because at the end you are lending Mexican pesos.
Right.
This is the first thing you have to take into account. No? And you have basically two risks. One is default, and the other one is Mexican pesos. And the third one for sure is technical risk or whatever. No? So in order to further mitigate default, we are an exchange risk. We are building this decentralized insurance system based on the compensation pool, and I think that is like one of the most important issues. The development, how this decentralized insurance system will work. And the other way around is we are going to work with different countries and different harvest kind of products, no? Because that way, maybe Mexican pesos devaluates. That is not the case. If you take a look into the Mexican pesos in last year, it even grew against euro. But for sure, there can be a black sun event in Mexico, and the Mexican peso fails. So you have to have different exchange, different divisa, different fiat currency. So
right.
You mitigate the risk, and also you have to have different harvests in order, because maybe there is a disease in the coffee, or maybe there is a super bad price that reduce the solvency of the farmers. But if you are in 5 different kind of products, at the end, you are mitigating the risk, balancing one with the other, right?
Yeah. Yes, you have to hedge your risk, the exchange risk, and also pretty much all of the other tail risks. So, so you guys are building this pretty much in-house. Do you see the possibility of using perhaps like outside service providers? Like I know there's a really interesting um, agriculture insurance project called Arbol, and they use like weather data, worldwide weather data to try to do like specialized insurance for farmers. So I guess the question is, uh, if a good solution came out, would it be enough, or do do you
I'm
have?
sure.
Yeah. Okay.
I mean, for sure, we are in super early stage as a project ourselves, and also as a
Yeah.
full ecosystem in blockchain space. And there will be many solutions that can complement our solution.
Right. Right. So I saw in the chat Frank Cruz had a question. He said, "I see the node fee is 4% and the platform fee is 4%, which equals to 8%. So with annual interest of 15%, should I assume a return of 7%?"
No, that's important. And one important thing is we are rethinking the fees in the platform, because at the end, for the most important thing is we want to have a very easy to explain solution for the farmers, and this is 3% monthly is your cost, and this will be decreasing, right? And for lenders also, we have to have something very easy to understand and to promote. And until now, it has been this 15% interest, and the rest, the fees at the end, is what is being variable. In fact, because at the end, you are getting your 15, and farmers are paying the 3%, and in between, we are taking less or more fees, basically.
Got it. And so the platform basically takes the fees by providing the matching of borrowers and lenders, eventually also the insurance for the loan, and then as well helping increase the reliability of the borrowers by connecting them to kind of global markets and helping them sell their product and other things that kind of increase the likelihood of the payment of the loan. That's kind of like, is that an accurate representation of kind of like the value proposition of the platform?
Yeah, we also guide the farmers to a better productivity. The local node is helping them to put the crops in common. We are funding infrastructure like solar dryers so they can sell in bulk. And to answer directly the question, those fees in the platform are charged to the farmers when they pay back. So it's not subtracted for the lenders.
Got it.
If that's not clear, we will have to maybe make it more clear in the platform, but we'll do.
Yeah, right on. All right, well, cool. We're about 10 minutes over, which is totally fine. We're gonna wrap up the call. I'm gonna give maybe one more shout out if anybody has any additional questions for you guys. But in the meantime, it was a real pleasure having you guys. I'm really sorry about the bit of messed up internet connection. Hopefully, next time you guys are on the call, which I definitely hope you guys come on. I'd love to see where you guys are at in a year from now, or a year and a half from now. But yeah, it was really great having you guys on the call.
Thank you.
So, Raul, you asked for the demo of the platform. Do we have still 2 minutes to show you the platform?
Yeah. So actually, yeah, sure. You could show it. Yeah. So I saw Raul going through it a bit.
Yeah, basically, this will
happy
be
to see it one more time. Yeah, let's do it.
This will be you can check the project filter to see which one are paid, well, we paid. Right now, you're seeing the Spanish version, of course. And the UX is very basic, like for a crowdlending platform. You just go there, learn about them, see the pictures, who is the local node, where the community is going. You can check the smart contract here. And well, basically the process will be, will launch it helps you launch this is USD because I selected my currency. If you want to see DAI, you can go to your profile and select.
Right.
But basically, since I have the MetaMask one, it will just like pop the usual flow,
Yeah.
Okay. Now it's not going to work because demo effect. Okay, yeah.
Well,
you can see,
demos never work.
yeah. And this is actually, you can see is the UX for signing because we're using Gas Station. MetaMask is having a contest to improve this UX so you can actually see what you're doing. But
Nice.
to take the money out will be an analogous process. We have a lot of like wizards and stuff, to make it easy. And here you can see, well.
Yeah, that was a perfect quick run through. Right on. Awesome. Thank you. Yeah. Yeah, I'm really excited about what you guys are doing because I think that like you are doing like a pilot and the beginnings of something that can be applied to a lot of different farming based industries, right? It doesn't have to be just coffee. It could be virtually any segment of like farmers, right?
Yeah, and one important thing is this second side of the project that is helping them to sell the products. This will be done also with smart contracts through one concept that is contract farming. So we have a deal with Nestlé, and Nestlé says, okay, I need 200 tons of coffee, and I am able to pay this. So this will be a smart contract, and farmers can join this smart contract and compromise their coffee, and so on. Lenders are lending to this farmer because they already have their products sold to Nestlé directly, right?
Right.
That's the dream.
I think it's achievable, and I think you guys are well on the way. And also a happy 2 years. You guys hit 2 years since launch in November, right?
Yeah.
Yeah. Right on. Well,
the company in November make 3 years. The platform in June is 2 years.
Nice. Cool. Cool. All right. Well, thank you guys for coming on. I gotta run. I am excited to see where you guys are gonna be in a year or two. So cheers. Thank you so much.
And you all are invited to try the platform and give us feedback.
Right on.
And join our Telegram channels. The English channel is not very active, but the Spanish one, as we are, all of the team are from Spain or from Mexico. Our community is mostly Spanish, right?
Right.
But we have an English channel, so you can be cheating there.
Right on. Can you post the link to that? So I'll include it in the agenda, and people could discover it if they're watching like the recording. So anyway, all right. I'm gonna sign off here, so I'm gonna hit stop recording. If you're watching the recording, I'm gonna add that contact